The only skill that actually matters. Hey, it's Clay at claytrader.com, and that is exactly what I'm going to be talking about here, whether it comes to stock market, options market, cryptocurrency market, does not matter. This is a skill that matters by far the most, and it's not the most popular. It's not necessarily the skill that people want to be hearing about, because I get it. People want to get motivated. People want to get inspired, and I realize that, and there's nothing wrong with that. However, if you want to boil things down to the practical side of things, meaning, yeah, okay, I get it. Hip, hip, hooray, all that sort of stuff is important. It's much funner to talk about. But what actually matters from the practical point of view, that's what I'm going to be talking about here, because it really is, when all things are considered, the only skill that truly actually matters. And I'm not going to ask you to trust me or believe me, but I would encourage you, find somebody that you do trust. Find somebody that you're like, I consider fill in the blank to be a professional trader. I consider fill in the blank to be somebody that I believe knows what they're doing, that I believe will give me good advice, and ask them, what is the skill that matters most? And at the end of this, when you see how all this plays out, go and ask them that and be like, hey, do you agree with the premise that this weirdo that I saw on YouTube is talking about? And I have a sneaky suspicion that they'll be like, yeah, that is actually what matters the most. All things considered, if you can't do this skill, then everything else is eventually going to fall apart. Or at best, you're just going to be having your wheels spin around in the mud and not actually make any sort of progress. So to set this up, I want you to know I'm not going to be talking about in theory here, right? So this is not like some sort of textbook where it's just going to be, well, this is how it's supposed to work. This is how I think it works. No, I want to show you how this all plays out and what this skill actually is. So on the screen here, you can see a stock that I found, and then I decided to make a trade on it, and I was going to go, and not going to go, I did go short, meaning, as a quick recap, for those of you that are maybe new to the markets, short meaning I wanted to see this thing drop down. And if the price did drop down, that would have been a good situation, because that means that, hey, you know what? I'm making money. So yes, as bizarre as it sounds, beginners, you can make money when stock prices or any value goes down. That is known as shorting, being a short. So that is what's going on. That's what I'm going to attempt to do here. Is I want to see this price go down, and if it goes down, I make money. So let's get to the actual trade, and you can see how it exactly plays out. 156. Okay, in there at 156. Let's see if we can get some movement to the downside here. If this can break down through, 155.25, that'd be great. A little bit of a bounce here. Well, that's not good. Let's see if it wants to come back down. Got to remember, it is a pretty jumpy one, so you got to give these things wiggle room. So the question becomes, do I want to actually add some more at 155.75? I do, actually. So I will add to the position at 155.75. So adding to a winner. But it's first got to become a winner. It would just be a slight winner because it'd be just a little bit below. But like I said, if this thing wants to come back down, yeah, well, I got myself into a choppy one here. Well, I'm going to have to stop out of this one soon. Give it a little bit of wiggle room. I don't want to get shooken out here, but this comes down to 156.25. I'm going to add. I don't know, maybe this is a legitimate bounce. Want to give it a little bit more wiggle room here. All right, all out there, $1,000 loss. Bummer. That one was looking so good too. Glad I got it where I did though. Now look at it go. So yeah, it happens. Was not pleasant. Was not fun. But you know what? Let's play the what if game in the sense of, you know what? What happens if I had not admitted that I was wrong and said, Clay, as much as you like that setup, as much as you thought the setup would work out, it's not working out, Clay. And you know what? It's not working out to the point you got it. You are officially wrong. Get out. And I did it. And that's the skill. The skill is, can you admit that you're wrong? Do you know when you should admit that you're wrong? Meaning, just because your P&L might flash red, does that mean that all of a sudden you're wrong? Here's a hint. No, absolutely not. There is going to be times where your P&L is red, and that doesn't mean that you should take the loss. Now, at what point does the red become the level where you need to take the loss? Well, hey, there you go. That's the skill. You need to be able to determine when that is, but you also have to be able to just acknowledge the fact that you are wrong, which is, for us as humans, very, very difficult to do. Very difficult to say, you know what, I'm wrong. And the twist here with the markets is, when you're wrong here, it's not like, oh, you're playing some board game and it's trivia and, oh, I got the question wrong. No. In this, it actually costs you real money. And that just compounds on to, it's just that much more difficult to do. But it is the skill that by far matters the most. Can you admit that you were wrong? And if so, that's great, but you still got to be able to know when you're actually wrong. But at the core, like I said, boiling everything down, you got to be able to admit that you're wrong, or in trading jargon, you got to be able to cut the loss. You got to be able to manage risk. Why is this the most important skill? I get it. I've been sitting here talking about how it's so important. Well, let's look at, like I said, the flip side of, if I had not done this, if I had not managed risk, if I had let my ego get in the way, if I had gotten stubborn, if I had, fill in the blank of behaving in a way that was not advantageous towards the strategy itself. So remember, I had 500 shares. So meaning, just keep the math easy, for every dollar the price would have gone up against me, because remember, I was short. For every dollar the price goes against me, that would have been another $500. So I got out right here. I waved the white flag at the 158 mark, give or take a little bit more than that, because I lost a little bit over 1,000. So right there was where I waved the white flag and said, I got to just get out. Now, every dollar beyond that is $500 more dollars. Okay. And so with every time that happens, let's just get a red line here to represent the loss of 500. So again, every red line that I throw in there is an additional $500. So let's see what happens next. Had I held. Ooh, all right. Well, there's another dollar. It went up beyond 158. So there's another $500. Let's see what happens here. Okay. Yeah. Little bit of a rust. Maybe Clay, see? Clay, look at it. It's coming back down. You should have just not honored that stop loss. Oh, see? Well, okay. Well, I mean, all it's done right now is gone back to that original thing. Oh, my. And then look at that. Up it goes to another dollar. Right there hits 160. So there's another potential $500 loss. Whoa. Well, I guess that's another dollar move. There's another red line. So not to insult your intelligence, but $500 more of a loss, $1,000 more of a loss, $1,500 more of a loss. And then wouldn't you know, look at that. Goes up to 162. And then wouldn't you know there, goes up and hits 160. 3. So as a quick recap, let's just actually do this. So we have how many red lines? 1, 2, 3, 4, 5. So 5 red lines, and each one represents $500 more. That equals $2,500. But you would have to add that onto the $1,000 that I already took. So plus $1,000, you're looking at a potential $3,500 loss. Now I realize, well, Clay, that assumes that you would have sold at the exact top, and that's a fair point. So let's just call it another $2,500, or let's just call it in total $2,500. So maybe I got stopped out somewhere, right around, I finally waved the white flag up around 161, 162. But let's just say that it was a $2,500 loss. Again, that's $1,500 more than what it had to actually be. So what you're looking at here is how that day actually played out. Now I have the entire live trade video on my channel. So if you want to go and see how the entire day played out and see the rest of these results, you can go and watch that if you want. It's like a 35-minute video. So I mean, I'm honored if you want to go and watch that. That's great, and I thank you in advance. But if you don't, as the recap here, that was the final day, which equated and finally came down to minus 461 on the day. So by the time everything was said and done, hey, you know what? I had cut that $1,000 50 hole into minus 461. Now with commissions, it would have been a little bit more than that. I don't know, 475. But we're talking at the margins there. Let's just talk about things from as is to keep it easy. But think about that though. What happens if I had taken that 50? If I had not been disciplined, right? If I had not honored that loss, is that number still at? No. What would I have to do? I got to add on plus $1,500 more, right? Because that was a very realistic. Now, again, to be fair, that number could have been even higher, but we won't assume that I got out at the worst possible time. But $1,500, as you saw, more than reasonable. So what does that do? Well, that literally makes this entire equation right here. Now you have still that I would have been going into the next day, $1,900. More than that, but just to keep the math easy, I would have still been looking at a $1,900 hole. Instead, I was going into the day with the $460 hole. Now, this is a rhetorical question, but I mean, which hole would you like to face? $460 being down or $1,900 being down? Like I said, no need to even really answer that. But that's what the skill allowed me to do. The skill of managing risk, the skill of being able to admit, Clay, you're wrong, just get out, cut the loss, kept the hole at 460. So which brings the question, okay, well, yeah, that was one day. How did the next day go? Well, here we go. Now, if you want to see how this day played out, again, you can go and watch the live trades. This was all documented out, so you can see that big losing day. And then the crazy part was the next day, the day after this one, it was just one trade. One trade netted me $525. I don't know, with commissions, let's call it 515. I don't know. But pointer being $515. One trade. Took, I think, 20 minutes or so for me to, find the trade. The trade itself, I think, lasted a few minutes. But point being that the very next day, $1,500 or $525. And I mean, not to insult your mathematical intelligence, but hey, that day is gone. Not only was that day gone, I was back into the green. But what if that number was again the $1,900? If that number was still, sitting there at minus 1,900, you see the problem here. I am still in the hole. And not only that, I'm still in the hole by basically $1,400. That's crazy to think that by making that decision to cut the loss, not only was I actually back in the green the very next day, but I prevented myself from making a good trade where I made over 500, but still being down $1,400. That is crazy. And that is the type of stuff that can snowball out of control. Because think about it from a mental standpoint. Took a huge loss. It should have been smaller. The next day you make a good trade, but then you can throw out the word but I'm still down that much more. Well, what then? Well, time to go make another great trade. And you go and try to make another great trade. And even if it works out, think about it. Even if it had worked out, and I made, let's just say, it another $500. I'm still down like $400. Let's go make another great trade. And it could work out, but eventually it's not. And all of a sudden, boom, you take another loss because you're frustrated. You start making stuff up. And I've been there multiple times throughout my time of trading. And it's a nasty, nasty situation. But it all could have been prevented had I done that one skill of just, hey, you know what? I should have just cut the loss where I did. And in this situation, like I said, I'm very glad to be coming here and showing this where I did do it right. I've done plenty of videos in the past where I didn't do things the right way, and it's come to absolutely crush me. But in this situation, I did do it right. So I don't say any of this patting myself on the back because I am doing it in the sense of I realize it's fun to always talk about the winners. I realize it's fun to see big results. But what matters the most is you've got to be able to manage risk. And to bring it all the way back to the beginning of the video, this is what I don't want you to trust me on. Just believe that everything I just talked about, just don't trust me, but go find somebody you do trust. Find somebody that you would consider a professional trader or somebody that's really good trading and be like, hey, would you agree that the one skill that actually matters the most is your ability to control risk, your ability to manage risk, like your ability to cut losses? Would you agree that at the core, that's what actually matters? And I'm very, very confident that if that person, like I said, is a professional, like, oh yeah, you got to be able to manage risk because people can get lucky. Yeah, you can randomly win, stuff like that, but nobody's always going to be right. Nobody's always going to luck out and get winners. And, you know, all it takes is one or two bad trades, one or two trades where risk is not managed, and then trading accounts can be wiped away. All the gains can be wiped away. I mean, have you ever been there before where you're winning, and then all of a sudden it's like one or two trades and you're like, hey, wait, where'd all my gains go? Again, I don't say that in a condescending way because I've been there many times, but it happens. So if there is one skill that matters, it is. You got to be able to manage your risk, to control your risk. And hopefully this little real life example helps you out. So none of this is in theory. This happened to me. Like I said, you can see it all play out if you go and watch the live trade videos, but I wanted to give you a kind of condensed version of how things played out. But just as painful as it is, as annoying as it is, take the loss because you never know when something like this could happen. Now, and to be fair, some situations it'll work out. Like, oh, I'm glad I broke my rules because I ultimately made money. But all it takes is one or two trades like you saw here where that price can keep going and going and going against you. And what would have been a very manageable loss to get back into the green now becomes a situation where you're looking at a huge red situation where it didn't need to be that way. Maybe it needed to be that way temporarily, but temporarily being the key word because, hey, all of a sudden, for me, temporary red, now I'm back to green and everything's fine. And that was only 2 days. I mean, I was already green still on the week, but I just got that much greener on the week because I was able to totally wipe away that loss. But would have been a much different situation had it spun out of control. So just remember that. Don't let things spin out of control. Focus on the skill that matters most. Learn how to manage risk. Now, before I go, a couple quick questions on my part. Do you enjoy videos like this where I make lessons out of some of these live trade results? If so, a very easy way to communicate that to me, hit the like button, leave a comment down below, even if it's just a thumbs up emoji, but hitting the like button and then leaving a basic comment, simple as an emoji, really goes a long way in communicating to me that these videos are worth it and you enjoy them. So do those two things and I have no problem doing more videos like this in the future. So hopefully this helps, and also check out the channel as a whole. Would love to have you as a subscriber. But before I ask you to hit the subscribe button, all I'll say is just check out the channel. And if you like what you see, then hopefully at that point, you'll hit that subscribe button. But yeah, thank you for hanging out and get out there, learn how to manage and control that risk. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.